Welcome back. The SGX is indicating a 35-point higher start, so it's small and it's not really decisive one way or the other. I mean, it's not as if you get a big gap up, which you can take a reverse trade on, or a big gap down, then you try to buy it. It's neither here nor there, a flat kind of open. We have Mitesh joining in. Sudarshan is with us as well to run us through what they would want you to do in terms of trades. Gentlemen, good morning. Good to have both of you here. Sudarshan, let me start with you. What are your thoughts looking at all the sort of volatility, price action, news flow? What would you want viewers to do?
Yeah, good morning. See, the intermediate trend is down. We have seen a pattern of lower highs consistently. The markets have seen relief rallies, which sometimes mislead. But overall, we must understand that we are heading lower. That may happen slowly, or it may happen with a lot of pain. That's a different issue. But this market is heading lower. Once we understand this theme, there will be relief rallies inside a downtrend. So perhaps we could be seeing a similar relief rally today. Maybe it could run into tomorrow. So my view is that since the rallies are likely to be short-lived, take intraday trades only on the long side today, because you could see a small bounce and make whatever money you can. But beyond intraday trading, don't carry any positions. The market has too much volatility to let us carry positions and, get caught on the wrong side.
Okay, absolutely. I mean, we are going into this event with a weak market on hand. So I guess, the weakness could only get worse or exacerbate. That's the fear. Mitesh, do you agree with that? In any case, the market closed below the 200-day moving average on Friday. It was down 1% last week. So it's been advantage bears so far. You think that's going to be the trend even this week?
So I think the short-term trend is clearly on the negative side. We had a big gap down, and while we did recover up the day's low on Friday, I think the gap down and the intraday charts turning negative means that every rally, every pullback will see some kind of strong selling pressure emerge. The 200 average is at about 17,434, and therefore 17,434, 450 is my preferred selling zone. I think around the 200 average area. And unless you start getting beyond 17,600, I think the trend will be negative. So you start selling at 17,435, 450 zones, and then add on to your positions around the 17,500, 520 levels. Having said that, I think retest of 17,255, which was the swing low which we made on 28th of Feb, is the first target which I look at. But I think there's a good chance that we might head towards 17,100 to that 17,050 support.
Okay, what about individual stocks? What are we looking at this morning, Sudarshan?
Well, it's a mix, because there may be a relief rally and some good stocks could go up. But broadly, as I said, the market trend is down. CanBank is an intraday short, short with a stop above 307. Havells was in my list as a positional buyer last week also. That continues. It's one of the few stocks that's outperforming the market. Buy with a stop, because it's positional, the stops are wide, with stop under 1135. India Cement is another intraday short. The stock seems to have turned and faced significant resistance at not very high levels. That's not good. So sell with a stop above 200. And finally, Tata Steel is a buy. Tata Steel is again giving the sense of some kind of base building. I don't know whether it will work out or not, but it's worth trying and finding out. Buy with a tight stop under 106.
Okay. Gentlemen, thank you very much. Okay, I think Mitesh's picks are left. Apologies. Mitesh, over to you. What are you tracking, and what in terms of individual trades?
Prashant, on a stock-specific basis, I have a mix of buy and sell calls, just purely because there could be some pullback and some stocks will go up, as Sudarshan rightly highlighted. So buy on M&M. This is a stock which in the recent 5-6 months has multiple times taken support around this 1220, 1215 mark. So it's back to those levels. Buy with the stop below 1210 for a bounce back to about 1260. NTPC is a buy with a stop at 178 or just below it, and a target of 186 is what traders can look at. And Balrampur Chini is a buy with a stop at 392 for targets of 415. Coforge is my stock on the sell side today. Keep a stop around 4165. Look for targets of 4050.
Thanks a lot to Mitesh and Sudarshan for that. Just wanted to point out a couple of stocks in pre-opening. Nazara Tech is actually taking a bit of a beating this morning. Remember, their step-down subsidiaries, Kidopia and MediaWorks, have cash balances at Silicon Valley Bank to the tune of almost 64 crores. So the stock is getting hit. The company has said, regardless of the outcome of the SVB issue, both subsidiaries continue to be well capitalized and are generating positive cash flows. But there's definitely some sentiment negative on that stock. And a couple of other names, Mahindra CIE as well. Sources say that M&M will be selling their stake, about a little under 5% stake in Mahindra CIE. So that stock is down about 6%. Prakash Diwan joins in now for a fundamental check on the markets. Prakash, good morning. On Nazara Tech, because it's been in the news, of course, this is a sentiment knee-jerk reaction on the stock. But if you were an investor holding on to Nazara Tech, what would your advice be?
Good morning, Sonia. So you're absolutely right. I don't think 64 crores of a deposit, and that too, now that we hear about the backstop, is at risk in any case. And remember, it's not the entire 64 crores that will have an impact on the Nazara balance sheet. You actually have 50% in Kidopia and probably about 33% in the other one. So it's fairly dilutive. Probably the market is reacting to some sort of a sentimental setback. But for investors who are already holding, I think it's a good time to add up. For those who like the business, they could also kind of get in. But valuations are fairly demanding in this case. So I would recommend a fresh buy. But as I said, only the caveat is only if you like the business. This is a good level to buy.
By the way, the rest of the market, banks, the indication is that banks could start off on a slightly weak note, which has been a little bizarre. Banks were battered and bruised quite badly on Friday as well, though there's absolutely no direct linkage with what's happening in the US and, of course, banks over here. IndusInd Bank in specific is an interesting one. Now, the stock is down almost 3% in pre-open. Mr. Katpalia has an extension, but it's not a 3-year extension, it's a 2-year extension. And some of the brokerages, I remember Abhishek talking about JP Morgan in particular, they have been sounding extremely cautious on the back of this development. In fact, Abhishek's back with us. Abhishek, fill us in. So the pre-open is showing a lot of that caution that you were alluding to at the start of the show.
First to begin with the news, Surabhi. So RBI has granted a 2-year extension to MD and CEO of IndusInd Bank, that is Mr. Sumant Katpalia. The board had sought for a 3-year extension, however. So his term was due to end on 23rd March 2023, which is now extended by 2 years. Brokerages say that the move from RBI is a negative surprise. Valuations are on the cheaper side for the bank, given the fact that price to book value multiple is around 1.2, 1.4 on a 1-year forward basis. They also say that, one can use this correction to add the bank in their portfolio, or they can invest in. So we have JP Morgan, who have actually downgraded the stock to neutral from overweight with a massive target price cut to about 1,060 from 1,400 that they had earlier. Even Jefferies had cut the target price by 50 rupees to around 1,550 from 1,600 that they had earlier. However, other brokerages do remain bullish on the stock. Not to allude with the fact that, this year or 2023 may see a lot of MD CEO terms actually ending. So the list that I have prepared is of City Union Bank, AU Small Finance Bank and Karnataka Bank, who will have their MDs or CEOs actually retiring, or, the term ending in April 2023. ICICI Bank, SBI and SDFC Bank, their MD or CEO will have the term ending in October 2023, and Kotak Bank, that term of Uday Kotak is coming to an end in December 2023. So we have the list compiled about 6 to 8 banks who will have their MDs retiring or ending the term this year. Back to you.
Abhishek, that's a very interesting events calendar that you've created for us. I'm going to take a printout and put it on my desk for sure. That obviously becomes a big watch point for a lot of these stocks. But Prakash, specifically on IndusInd, come in on this. There's a wide divergence. There's JP Morgan at one hand, close to 1,000 odd. There are a lot of other brokerages still calling for 1,500 plus. Do you see this as a negative, that the fact that Mr. Katpalia has got 2 years instead of 3?
So, Surabhi, probably, JP Morgan knows some plans of the bank between the second and the third year, and which probably they're disappointed with the shorter tenure. I don't have any input on that. And, at times what happens is when brokerages have targets which start looking a bit more ambitious, they always use some trigger, some excuse to bring those things down, and that's like, they talked about an ROA expectation of more than 2%. I mean, the best of banks probably don't match that. So, it's definitely setting the bar higher and then probably reducing your price objective just to make it more contemporarily conducive to the environment that you have. So I don't think there's anything negative with that. IndusInd continues to be a promising bank, the mid-sized private sector banks, which has the potential to scale up, especially now that the promoters also have very clearly indicated they're putting their weight behind the business. So yeah, I mean, it could be a good opportunity for some of the people to look at if they really like that business and they don't have much exposure to private sector banks.
Okay, by the way, the pre-opening rates have settled absolutely flat, but the stock which is on fire this morning is Tech Mahindra, up 6%. The street was awaiting this, right? A succession plan post Mr. C.P. Gurnani leaving. And now we know that Mohit Joshi will join in as MD and CEO for 5 years. Reema's with us. Reema, the street really likes this development.
Yes, absolutely, because one, it ends the speculation. The street has been speculating for the last 6 months who is going to take charge as the MD and CEO of Tech Mahindra after C.P. Gurnani steps down in December of this calendar year, 2023. So now finally that speculation, that uncertainty has come to an end, and it's Mohit Joshi. Now Mohit Joshi himself has very strong pedigree. He comes with over 20 years of experience in Infosys, where he was the president of banking and financial services and the healthcare vertical. Both these two account for more than 36% of their overall revenues. Not just that, he was also had the executive responsibility for all the large deals across Infosys. So, it's a strong name and the street likes it. But he has his task cut out because Tech Mahindra has been an underperformer over the last many years now. So his immediate goal is going to be reverse the underperformance on the revenue and also catch up with peers in terms of margins, because Tech Mahindra's margins have been, lower compared to the rest of the peers. This news is also a bit of a setback for Infosys because in the last 6 months, they have lost 2 presidents. And president in the Infosys hierarchy of responsibilities is second to the CEO. They lost Ravi Kumar to Cognizant, and now they've lost Mohit Joshi to Infosys. So it's a win for Tech Mahindra. The street likes the appointment, but it's not going to be easy. He has to execute on the responsibilities ahead, but it's a bit of a setback for Infosys. Back to you.
Okay, thanks a lot for that. Prakash, your quick thoughts here on Tech Mahindra. The stock, as Reema was saying, has underperformed its peers over the last 1 year or so. Is the risk reward looking favorable now?
Absolutely. I mean, this has been one of my top picks on the within the IT pack, given the fact that whatever was going wrong on the telecom side, which has been their bread and butter business, could change dramatically with this new incumbency of a person who has got a very strong pedigree. So yes, and that's 1,1500 zones that it used to trade into. We've seen almost like a 40% sell-off from there. That could kind of be the catch-up play for Tech Mahindra, while the TCS and Infosys of Wipros of the world probably struggle a bit to just get their act together. So I think it's a fairly positive trigger. The street will like it and continue to hold it in good state. Yeah.
Okay, by the way, I just want to mention Yes Bank is down almost about 10%. So just keep that on your radar. The 3-year lock-in period for Yes Bank ends today. So, the lock-in for shareholders of Yes Bank. So that stock is really taking a big knock. Any thoughts here, Prakash, on how one should approach Yes Bank? I mean, it's obviously had its fair share of problems, but there's a big block deal as well. I think 2.5 crore shares are being traded in a large block deal in Yes Bank. Any thoughts on how to approach it?
You still don't say yes to this, Sonia, because it's still beleaguered. They've done a bit of course correction, but the core business needs to start kind of contributing. I mean, selling off some of the assets, getting an ARC spin-off, that's not going to help. And some of the larger banks which have backed it in times of crisis will, of course, want to kind of reset their priorities as well. So once that lock-in gets done, you'll probably see a lot of decision-making around it, which might not be good on the liquidity side. There could be a lot of free float that comes to the market, and absorption at this point in time, given the banking environment, is of course a little bit questionable. So it will see some pressure, but once it settles, you could review it at a very different juncture in a different way. Yeah.
This is going to be an interesting one, Prashant. I was looking at some of the numbers that Abhishek was talking about. I think about 36 to 38% of the equity is held by the lenders who would come to rescue the bank. And the lock-in for the entire amount ends today, but technically, I mean, no one's going to, I guess, bombard the market with that much stake. I don't know if there will be other regulations that come in or what happens. Suddenly, you have 37% equity,
which is free
to be sold. So,
Absolutely. But I just want to say, well, individual stocks, etc., very much, and there are large pieces of news flow. The bigger thing to watch is basically what's happening to some of these, global macros. I think the Nifty in the pre-open has settled about 9 points higher. The dollar is still extremely weak, and bulk of the correction has happened in the last 1 hour. And in reaction to that, look at where the rupee is open, for example, the dollar rupee. The rupee is open much stronger as compared to Friday's close. So, it's a little more stable. I mean, as compared to where you left off on Friday, things are looking a little more good. But as I said, as part of my setup, there was a short-term reversal, which we saw. Most definitely we saw on Friday. So that does not change because of what has happened. It does, at the margin, perhaps provide a reprieve. It's a big move, 1/3% move on the dollar rupee cross as well. Nifty at 17,421 or so. Mitesh and Prakash are also with us. Mitesh, any additional thoughts looking at the way the open is going to be right out of the gates? Anything to do?
Yeah, nothing much, honestly, Prashant. I think, we'll wait for this pullback. If it plays out by another 50 points, take a shot.
Okay, just about 15 seconds left. And okay, there you have it. There's the opening bell for you. First tick on the index is absolutely flat, but it's not a bad thing considering all the news flow that transpired across the globe. So flat for the Sensex, flat on the Nifty. The mid-cap index is taking a bit of a knock, so don't lose sight of that. 90 points gone, and the Bank Nifty is seeing some amount of pressure, down about 50-odd points. What's taking a knock this morning is Indices Bank. As we were telling you, Sumant Katpalia's reappointment has happened for 2 years. The expectation was that it would come through for 3 years. And I think the street is just factoring that in right now, down 4.5% over there. Infosys, Mohit Joshi will now move to Tech Mahindra. He's appointed as the MD and CEO there. So for Infosys, once again, that is a setback, down about 1%. On the flip side, Tech Mahindra is the one that's really reacting positively to that news flow, up almost about 6-odd%. So lots of heavyweight news flow coming through. In fact, since we're talking about changes, HUL was also in the news. They appointed Rohit Java as the new MD and CEO to replace Sanjeev Mehta. So HUL, was in focus last week as well. A couple of other stocks, of course, in the broader markets, names like HAL, Hindustan Aeronautics, after winning that order of 667 crores, HAL is trending in the green, up about 0.7%. But for the frontliners, the Adani Group stocks are also in the green. As our colleague Vivek was telling us, that they have prepaid a lot of their debt amounts. So Adani Enterprises, Adani Ports, all in the green, up about 1.5%. Reliance is trending higher, batting for the bulls this morning. ONGC, Tata Steel, TCS are also a couple of other stocks that are trending in the green right now. IT is doing well, actually, not just Tech Mahindra, which is now up almost 8%. On the appointment of Mohit Joshi. But apart from that, HCL Tech, Wipro, TCS are all also trending in the green. So the entire pocket is looking pretty good. On the downside, Indices Bank is down almost 4%. Apart from that, Nestle, Titan, a couple of these consumption names, HUL, also in the red a tad bit. NTPC, BPCL, Hero Motocorp, Power Grid are a couple of other names that are just trending in the red. But this is a good market, a good opening. After the clarifications that came in from the US regulator on how depositors won't be losing money on SPB, most markets have trended in the green, and the Nifty is also not too far behind. 53 points higher now on the Nifty. Remember, the 200-day moving average is 17,427. So we're above that now. Important to see if we stay above that level, the 200-day moving average. But for now, the start has been in the green.
Well, a lot of the Adani Group stocks are reacting well to the news flow of the group, of course, reducing more promoter pledges. So most of these names, Adani Total Gas, Transmission, Ambuja is up about 2.5%, ACC is up about 1% as well, NDTV is up about 2%. So all of the Adani Group is positive. Nazara is down 3.5%. Not as bad as what the pre-open was indicating. Yes Bank is down 7.5%, but remember it's a 15 rupees stock, so the percentage moves always look pretty big at that. Mahindra CIE is down 7.5%, and Sona BLW. Now these are the two companies where we're expecting, of course, there we go. That's the Sona BLW large trade that's happened. Almost 21% equity has changed hands as far as Sona BLW goes. So that's a big fund moving out. And similarly for Mahindra CIE, it's because of the block trades that we're seeing these kind of exaggerated price moves. The Nifty, by the way, is really doing well, 66 points higher. Tech Mahindra is leading from the front. There's a lot of buying in metal names as the risk on seems to be back, at least for now. And banks are reversing. ICICI Bank, Kotak. And Prashant, I guess this was a trade that perhaps was waiting to happen, because on Friday, a lot of people, including myself, were asking this question: why do Indian banks have to fall as much? And now I think with the weekend developments, at least there's some stability there. It seems to be helping the market.
Oh, absolutely. So 70 points higher, 17,484 is where we are at. So this is a good start. I mean, the open was a little tentative, 2, 3, 4, 5 points for the first 5 minutes or so, a little down, a little up. And then, I mean, there was a bit of a pickup. Although we'll see, I mean, if this gap up does come under pressure, or, we kind of build on it. I would say, on balance, there isn't sort of enough kind of fuel in the tank to do anything big in either direction, right? I mean, there's no real reason for the market to sell off in any big way. Or at the same time, is there any great urgency for the market to go up a lot immediately? Perhaps no. So 17,500 or so is where we find ourselves at. Let me just quickly highlight a few other stocks, right? Tech Mahindra, of course, we've discussed, we've put out quite emphatically. 8%, that's a big one. Reema's, of course, been highlighting that. Ambuja Cement, Adani Power, Adani Enterprises, Adani Wilmar, these are all some of the big volume-led gainers. None of them are limit up for the day, but I think Adani Power maybe is around 5%. Hindalco is up about 1.33%. Shipping Corporation is up 3.5%. NCC is up about 1.5%. SAIL, MRPL, Jindal Steel are some of the others which are coming up. And then there is, I mean, interspersed is a lot of other Adani Group stocks, Adani Total, Adani Green, all in the green at this point in time. Yes Bank, 6%, Sonacom, 5%, all news related. Indices, 5%. Indices is a large cut. Mahindra CI, Block, 7% lower. BDL down about 2.5%. AU Bank, 2%. Nazara, 3%. Sequent Scientific is down about 3% as well. And then there is KEI Industries, which is down 2% or so at this point in time. Slowly but surely. And I would say, at the margin, I mean, this is the kind of impact coming through because of what we're seeing in the dollar index, which is sold off substantially, 0.6, 0.7% in the last a little over the last 1 hour or so. That's a meaningful decline. It's a signal. It's a signal that the market is taking note of what has happened in terms of the policy steps, and of course also a signal of perhaps market repricing expectations in terms of what the Fed will do. SVB is a systemic one-off kind of an issue. The bigger problem for the market was sharp rate increases. Same time last week, or maybe last Tuesday, markets were worried about a 50 basis point from the Fed, and now we've got people like Goldman Sachs saying that we will see no hike from the Fed, and I think that's the relief which perhaps starts to come in. 103.74. Sonia.
I just want to mention one thing on the Adani Group stocks. I know, my colleague Vivek was telling us about the prepayment of the pledges and the debt, etc. But there is also news reports suggesting that Adani Group has told all their domestic lenders that they will stop their proposed investments. They will focus on just deleveraging currently, which of course we got the news flow, but also the investments that don't have any funding commitments, they're going to go slow on that. So they are working their way to sort of resolve some of their issues because of which the stocks fell. And, if you look at these stocks itself, I mean, Adani Transmission, for example, just in this month is up 50%. So there is definitely some recovery that's playing through in the group stocks.
Oh, absolutely. I mean, I think across the board for the group, perhaps growth rates come off a little bit. I mean, in a very orchestrated way. And that perhaps is it's not a bad thing at all. 100 plus points on the Nifty is what we have. So building on the opening gains. Mahesh Patil is joining us, Chief Investment Officer at Aditya Birla Sun Life AMC. And he's a market master of the day. Mahesh, great to have you with us here on the program. Thanks very much. So much has happened, right? Last 4-5 days. How would you look at all of it? And what are the prospects for the markets, Mahesh, as you see it? I mean, by the way, the data for inflows into mutual funds hit a new high, right? So absolutely no shakeout there, which means that funds and you guys have money to invest. Are you doing so at this point is the question. Go on.
Yeah, good morning, Prashant. So I think there has been, in the last week, couple of weeks, we've seen that, as I said, expectation of interest rates going up and remaining high for long was something which really affected the market, global markets and our markets also. And the recent incidents of SVB also had an impact. But I think the Fed has done a good job in terms of giving a backstop, right, for the depositors and providing liquidity against the assets. So I think that should give confidence back into the banking system. And as a result, we have also seen that with these kind of issues coming up, I think the Fed is now likely to probably go a bit slow in terms of rate hikes. And that is gives some relief to the market over here. I would say that clearly, I think in India also we've seen the rates have gone up quite sharply, and that will have some impact in terms of growth. We have seen a few sectors like consumer durables, even mortgages slowly starting to get impacted. And I think that will have to get factored in terms of the numbers as we build our expectations for FY24. Though I would say that overall, if I look at it, in India at least, there are a lot of sectors, right? Whether it is the banking sector, the auto sector, or even for that matter, metals, for example, all these, even IT sector for that matter, should report fairly reasonably good growth next year. So even if there is a slight downgrade, we don't see any material impact in terms of earnings getting hit in the next fiscal year. We are still looking at a double-digit growth for Nifty earnings next year. I think in that scenario, I think the markets, while currently, there are no any positive good news, markets should probably do some kind of a time correction. But frankly, one should not see too much of a downside from here. And now with the markets having remained here for last more than 1 year, almost 15 months, the valuations are also now reasonable. So if I look at the valuations from a long-term perspective, the market is no longer expensive. It is near the long-term average. So given that the earnings growth what will drive the market trajectory from here out is what I would see. And as I mentioned, the liquidity also scenario, like inflows remain fairly decent. So that should provide the support to the market. While FIs have seen some amount of selling in the first 2 months. But there again, I think the differential of India was at a premium to the emerging market significant. That differential also has come down because India has underperformed. So one should not expect too much of selling from FIs also going forward. So I think that should provide a kind of a downside support to the market. And I think slowly from here, I think market should consolidate. And we still remain fairly optimistic, positive over the next, over a medium term.
Okay, by the way, I think the market is perhaps listening to you because it's a really good start. The Nifty is now up almost 100 points and is taking heart from all of the the soothing comments from the US regulator on the SVB issue. So Nifty now at the high point of trade, the Bank Nifty as well in the green. Mahesh, the stock of the moment is Tech Mahindra on the appointment of a new MD and CEO. Now, I know you don't want to comment on individual stocks, but there was, of course, a lot of uncertainty with respect to the succession plan, no clarity. But now there's, clarity in place. What do you do with names like Tech Mahindra that have perhaps underperformed up until now? And in general, what's your view on the IT space? Are you buying now?
Yeah, so I think many companies, we've seen that any leadership change can lead to a significant re-rating because depending on the leader, I think the market can then draw down in terms of what's the long-term trajectory of growth for that company. So I think that's a significant moment for any company, especially where we've seen the company underperform for a long period of time because of compared to the broader industry. And I think that is something which market always takes it positively. And I think we've seen that in many companies in the past where there have been significant leadership change. Over a period of time, depending on the delivery, the markets can have re-rated those stocks. So that's how we look at any leadership change. Overall, on the IT sector, we have been fairly positive. I would say we were negative on the IT sector around 6 months back. And slowly our negative has kind of come down and we've kind of neutralish to mildly positive on the IT sector. And the reason for that is that we are not seeing now, based on the commentary from the large IT names, we are still seeing around 8 to 10% kind of a revenue growth next fiscal year. Earlier market was, we were expecting around 5% kind of a revenue growth. And more importantly, the margin trajectory overall for the IT company should be fairly good going forward because the pressure on the employee cost is now easing off. Rupee has also depreciated a bit, so that should aid. So as I said earlier, we're looking at a double-digit bottom line growth. While the top line growth will be high single-digit for the IT sector, the bottom line would still be in the double digits, around 12 to 13% growth, which is a fairly good growth in this context if you look at the current macro situation. And it's a sector which is over a longer term also we believe the whole digital move toward digitalization is a long-term theme. And this is a good time to really to accumulate some good IT stocks which are really focusing on the whole transition into digital side.
Got it. By the way, just want to point out that Equitas Small Finance Bank is down another 5%. Remember, it was on Friday that with the the reverse merger being complete, shareholders actually were allotted shares, and a lot of those shares were getting sold in the market, perhaps because the stock had run up a lot. But that is still continuing today. So just wanted to point that trend out. Mahesh, hi, good morning. Surabhi here. Let me ask you a wider question on financials. Today we're seeing, of course, decent pickup in a lot of the top-tier banking names, both private and public sector. The mid-cap and the small-cap banks are kind of still on the periphery. What's your approach to financials? What are you comfortable buying into, and what would you stay away from?
The financials, after the initial run, what we saw last year, has seen some kind of underperformance, though I think there's nothing to worry about there in terms of the results. I think that the results next year should fairly be on track. We are not seeing any kind of material downgrades to the financials. And while I think on the banks, I think they have benefited because of the increase in interest rates. Okay, but I think we will see some pressure on NIMs going forward from the first quarter of next fiscal year. But I think that is factored into the numbers, I would say. There is a chase for deposits in a big way, and banks are really running around to get deposits, and we've seen almost 200 basis point or more increase in the deposit cost. So I think that will start to now filter in going forward. But having said that, I think the sharp increase in NIMs, what we saw in the last 2 quarters, I think market is already factoring that they will come down. Overall, I think the numbers should still be good. Credit growth also, we're expecting that to moderate down. Okay, compared to around 15% growth, what we've seen. Expectation is it will come down to around 10 to 11% because overall nominal GDP growth is expected to come down next year because inflation, especially WPR, is likely to come down sharply. But all in all, I would say that banks still offer reasonably good risk reward in terms of the growth as well as the valuations. Valuations are fairly reasonable. And I think banks with a good liability franchise, I think, would be something which I think would do well in this context where, the liabilities costs are likely to increase going forward. So larger banks with good liability franchise and a good mix of retail and corporate. I think we've seen some pickup in corporate loan book also, which was kind of flattish or negative for the last few years. There has been some pickup over there. And overall credit cost should still be fairly benign. We don't see any substantial increase, at least in the next fiscal year. So overall, still positive on the banks. I would say it's underperformed. It's a good opportunity really to look at some of the larger banks.
Okay. All right. We will leave it at that, Mahesh. Thanks a lot for joining in. Appreciate your thoughts. By the way, the market is still holding up with good gains, 100 points higher. The mid-cap end of trade is struggling, actually. It's down almost about 40-odd points. So just be mindful of that. This is not a market that's all gung-ho. And remember, we start this week on the back foot with not just negative news from SVB, but also the Nifty was below the 200 DMA last week. So in that context, there is a little bit of a recovery, but it's not a conclusive one. That's the only way to put it. But let's move on and talk about a couple of more stocks. MGL was in focus last week. The stock surged on news that it will acquire the city gas arm of Ashoka Buildcon called Unison Enviro for a cash consideration of over 500 crores. Ashush Singhal, who's the managing director at Mahanagar Gas, joins us now to talk about that. Mr. Singhal, thanks a lot for joining in. If you can just start by telling us a little bit about this acquisition, right? How are you planning to fund it? Where will the 500 crores come from? Will it be largely from internal accruals? Would you want to take on any debt? Because you had said earlier that you're planning to incur some capex as well. And what kind of incremental volumes are you looking at post this acquisition coming on board?
Very good morning. The funding will be primarily done through internal accruals only because we have a very healthy balance sheet and there is hardly any debt on our balance sheet. So around 530 crores can be easily managed through internal accruals. As far as the volumes are concerned, currently there is 1 lakh standard cubic meter per day sale is happening, which is 0.1 MMSCMD. And going forward, we expect this sale from the Union Ashoka Buildcon company to go up to around 1 MMSCMD. That is almost from 1 lakh to 10 lakh standard cubic meter per day.
So when does that happen, sir? This ramp up that you're talking about, which fiscal year are we talking about?
Around 7 to 8 years from now, maybe around 2028, 29 financial year.
Okay.
Mr. Shingle, for to go from 1 lakh to 10 lakh, how much investment is required?
See, currently the company has invested around 270 crores. That means around 135 is the equity contribution and balance is taken through debt. So we expect around 100 crores per annum capex will be done, but it needs to be reassessed once we take over the company. The takeover is subject to obviously the PNGRB approval, which is expected after 5-year lock-in period, which is getting over in September 23. Somewhere around October or November this year, we are expecting to take it over. After that, we will do once again the reassessment about what are the targets, what is the volume growth, what are the margins and the profitability of the company. And we expect around 100 to 150 crore per annum will be invested into the company.
So we're talking about at least 700 crores of investment to reach 10 lakh crores 7 years hence, or maybe more, right? 700 to 1,000 crores over the next 7 years.
Yeah, around that 700 to 800 crore. It's a very ballpark number. Depends on lot many things.
So, Mr. Shingle, let's just delve a little deeper into that. I mean, there's one section of the market that's been debating whether this is a pricey acquisition for Mahanagar Gas because you've had to pay a little over 6 times trailing price to book. So you invest this much amount, as Prashant mentioned, 700 to almost 1,000 crores over the next several years. What's the immediate ramp up? And is the exclusivity in these regions absolutely assured to this entity?
See, exclusivity should not be always taken as a negative thing. One, that if we are not having exclusivity on our GAs, then we have the opportunity to do in other GAs also the marketing. So in that way, we don't want that exclusivity to be seen a very negative one. But as going forward, the matter is sub judice, and we expect that exclusivity will remain for some time to come. Anyway, it is a regulator's matter, so we don't want to comment on that. The other part is that this is not a very pricey acquisition because it is almost 4 times from what the equity contribution has been. And similar acquisition, let us say in MNGL, has also happened 4 times from the capex. Otherwise, also, if these 3 GAs are being seen from a broader perspective in terms of MGL, because we have been bidding for so many rounds. However, we could not make it through in many rounds. So our balance sheet is very healthy. We expect that this cash should be better utilized rather than putting into just bank and getting some interest on it. So there is a 3 GAs we have, 3 more GAs coming in one way by inorganic growth is a good potential we expect. And around, if you see MGL history also, it is 3.5 million standard cubic meter in 25 years. So 1 million will give around top line of 2,000 crore and bottom line of 250 crore round about that.
So how much is the cash on the books currently?
Around 1,500 to 1,600 CR.
Okay, so 1,500 to 1,600 CR is the cash on the books, out of which about 500-600 will be used for this acquisition. The rest of the money, are you planning to make any more acquisitions in the near term, since you said that this is the route that MGL would like to use?
We are scouting for several opportunities, but as of now, we like to consolidate this one and look for any good opportunity if, as and when it comes. We are also looking at more diversification, like we are running our strategy exercise and expect that something will come out of it in terms of diversification into newer areas and maybe some electric vehicles or other areas, like so many other things we are exploring as of now.
Oh, that's interesting, because some of your peers are doing the same. So what are these areas apart from electric vehicles? What else would you be looking at? And have you started any work on it? I mean, any kind of timelines? Are you looking at diversification in this calendar year itself?
It takes some time. We are expecting that this financial year, that is FY24, should see something coming into being. But we expect that long-term haulage in LNG, electric vehicles, CBG are good areas besides other things which we already are working on. And some of them, if they fructify, in case of some upstream integration related to CGD equipment manufacturing, also we are thinking about it. But anyway, all these things are on paper as of now. We will do proper due diligence and see whatever can be best utilized.
Okay. Sir, you just to get those numbers, you said at 1 MMSCMD, after taking it up from 0.1 right now, 7 years out, this could, at that output level, at that volume level, top line addition could be 2,000 crores. And you said bottom line, you mean EBITDA, addition could be 250 crores, right? Just to clarify.
That's right.
2,000 crore top line, 250 crore EBITDA addition, 7 years out.
EBITDA or maybe, may not be EBITDA, but maybe PAT also can be in the range of 200 crores or so.
Addition.
Okay, so yeah, that's an important clarification, Mr. Singhal. This is a 7-year ramp up. When does the first sort of revenue benefit start to accrue? FY25, 26, how are you expecting this to play out?
See, going by the result of Unison this year, the half-yearly results are available, and also prorating it to the next this year, we expect that top line to be around 200 CR this financial year itself. And it is already a EBITDA positive company, and it may become PAT positive this year or next year, definitely. Going forward, NGL will bring its own expertise and core competence to multiply that factor and try to bring it the portfolio optimization and other synergies with NGL to see that the acquisition is real, making value and worth for our money.
So as you achieve economies of scale with this acquisition, what could the blended margins be, the EBITDA margins? Currently, you have a margin of around 8.2 rupees per SCM as of Q3. With Unison coming on board, will it get better? If yes, what would the broad range be over the next 1 year?
See, if I remember it correctly, then Unison has a range about 7.5 rupees to 7 to 7.5 rupees EBITDA margins. And we are running at 8.5 rupees round about that. So it's not way off. I mean, going forward, it should be improving. And both put together, if we take into account portfolio management, other synergies coming into force, we expect it to be around 8 rupees or slightly better than that.
Okay. All right, Mr. Singhal, thank you very much for the updates on Unison and, of course, the rest of the business as well. Appreciate you joining us this morning. Thank you. That's
Thank you so much.
That's Mahanagar Gas. By the way, the market's cooled off a little bit. We were, tracking slightly higher. Now it's just about a 40-45 point gain. IndusInd Bank is the real watch point. Look at the pressure on the stock, 5.2% lower. Infosys is also now on the lower side of the screen. Other IT stocks are still holding up, but Infosys and IndusInd Bank, these are two big names you need to watch for. Look at the way Infosys has sold off. That's because of the Tech Mahindra, obviously, situation. Tech Mahindra on the upside, obviously, they get Mr. Joshi. Infosys loses one of their top lieutenants, and the impact is playing out on the stock. Tech Mahindra doing very well, 8.5% up. We'll take a break on that note. On the other side, we'll be joined by Venu Nair, Managing Director and Chief Executive Officer at Shoppers Stop. We'll talk about some of the company's strategic plans. And after that conversation, we get chatting with the management of Nazara Technologies. They have a small exposure to Silicon Valley Bank. All the details will be discussed with Nitin Mittersen.